Hey, welcome to the 40 Finance channel, everybody. Today we're talking about the QQQ, but really the market in general and thinking about after this stretch into all-time highs, is there any juice left to squeeze in things like the QQQ or even the TQQQ for that matter? Anytime you see a sustained run of all-time highs, you obviously have to think to yourself, what's the downside from here? What does the market signals tell us about where we're at? And that's what we're going to kind of look at today. For myself, this has just been more or less a holding pattern. I was lucky back in April to be a part of the April dip and to pick up some things then. And ever since then, though, the case for explosive growth, I don't think has necessarily been there on paper. But what we're seeing from the corporation side is this AI boom is just simply printing money. Now, as we go along here today, we're going to be using all the charts and data from Seeking Alpha Premium. If you're interested in learning more about this stock research platform that I use, all the time here on my channel, then check out the referral link in the comments, get you a nice discount and a free trial on top of that. All right, so broad view of the QQQ that I think everybody knows. Running into, just after Valentine's Day, we were at 539. Today we're at 576. In between that short stretch of Valentine's Day or so to now, which is basically 6 months, right? We had a downturn and a bottom that came around April 7th. And ever since April 7th, though, which, by the way, is, roughly 4 months, we're not even 6 months into this epic run up, and here we stand at all-time highs. And the thing that's interesting, of course, about the all-time highs is where interest rates are and the sort of struggle between two camps there on whether they should go up or stay the same or go down. But there's probably much more pressure to lower interest rates. And if that happens, of course, there's a lot of people who think, that's a huge boom for the stock market because it takes off of the cost that the corporations are paying in order to deliver these sales. Because there's a lot of companies that, borrow money to make these CapEx improvements that you hear everyone talking about with AI. And if we just look at some other basic heat indicators of a bull market, you got your 50-day moving average far above the 200. And what's interesting is that's only been running that crossover to the upside. That happened in like late June. So we're really in the infant stages of this particular crossover. And then you got your RSI average running at about 62. I mean, it's not the hottest that you'll ever see, but it's definitely up there. There is a lot of strength and buying going on in this market right now. Now, if we look at the underlying stocks within the QQQ, can we find some signs that says perhaps overvalued, right? Overvalued on the fundamentals of each stock. With the QQQ, it's very top-heavy, not as top-heavy as a lot of people believe, but you do have, like NVIDIA, for example, at 10% of the entire index. And there is roughly 25 to 30 stocks that make up this top 70%. All right, now clicking over here to this custom view I created to get a better feel of the forward valuation metrics, PE, growth, things like that. And what's really interesting to me is the forward PE on a lot of these companies is actually lower than the current PE, which is exactly what you're kind of looking for if you're analyzing stocks at a fundamental level. NVIDIA at 58, trailing 12 months PE, and the forwards at 41. Same essentially with Microsoft. They take off 5 points heading into the forward, so very healthy there. Google is right at the line, 21 into 20 on the forward. Same with Amazon, same with Meta. Then you can see Broadcom here. They're over 100 on their trailing 12 months, but that drops almost in half. Tesla's always had a high PE, so they're sort of an outlier. Netflix is probably running hot at 50 times trailing 12 months earnings. However, they do take a notch down, 47 or so, if you're going to look ahead. So the eyeball valuation metrics in terms of earnings is not that bad. And then if we want to look ahead to revenue growth, okay, so you have to compare what does next year's revenue look like compared to this year's revenue. And in terms of the QQQ, it's the revenue growth that really matters. So starting from the top, you have NVIDIA. Year over year, they've grown 86%, and there's a projection for another 60. Microsoft looks like 2 years in a row, just shy of 15% growth. Apple, we know, is slowing down. They're more of an EPS growth company, but even they're saying plus 4% next year. Google staying about consistent. Amazon, same thing. Meta, same thing. And just to be clear, when I say same thing, aka business as usual, year over year and looking ahead, this is not easy. So 19% growth for Meta, looking backwards and forwards, when you are generating $47 billion, 20% of $47 billion is not something that a lot of companies can do, continue to grow at that pace. So very strong sign with the companies in this index. Even Tesla, if they actually hit it, they'll go from negative revenue growth year over year to potentially hitting 5% on the forward. And then we talked about Netflix, and what's amazing with these guys is where do you even find 15% growth, right? It's obvious that it comes from price increases and a little bit of global expansion, but that's still a great number. They generated $11 billion last year in revenue. So to grow that, arguably 15% 2 years in a row, if that actually happens, again, it's not that easy. Okay, so we talked about NVIDIA being at the top of the mountain of the QQQ, roughly 10% of the whole index. Yes, they're showing strong signs, and there's a lot of stuff that is working in their favor, but we know NVIDIA has been a hot stock for a long time, right? They've put up impressive numbers for a long time. Where do their projections stand today compared to what they've done in the past? So the growth rate. So yes, they're growing. Yes, they're doing well. How does their growth percentage compare to their performance in the past? And what I thought was interesting, if you look at the forward metrics, so this is revenue growth looking ahead, they are at 61% is the expectation for the next 12 months. Now that's down, right, from the 86% they achieved this year, but the 61% is still 40% above the average pace that they've had over the past 5 years. Okay, so they are growing above average by a healthy clip. Then if we go down to EPS growth, 65%. Again, this is a growth percentage. That is down from the trailing 12 months. The projection is less growth than the last 12 months. But if we look at the 5-year average, it's 55% on the EPS growth line, plus 18% over the 5-year average. So the whole point of this is that with NVIDIA, there's more to this story, at least from a projection standpoint, than just, they're doing well. An AI boom. They're actually doing historically well compared to their 5-year average, which is a great sign if you want to believe that things continue in an upward trajectory. Now, just to compare NVIDIA to the second place on the QQQ, you got Microsoft revenue growth forward 14.68. Their 5-year average, 13.45%. So their expected growth rate is running 10% above what they've done in the past, which is good. And then if we go down, I think 15.42% on the EPS growth percentage, that is actually flat to slightly down, minus 1% to the years past. But with Microsoft, you're talking about obviously a huge corporation, and they're maintaining the growth. So if you look back at their stock performance and what it's done, so to speak, to get here, it's projected that that will continue. All right, guys. So, bottom line for me, if you're just going to take a look at the health of this run up that we've seen in the QQQ, it appears that things are still very, very healthy. Now, with all that being said, it doesn't take a whole lot to shake the market, especially when everybody's feeling good. People are looking for excuses for stocks to go down. And at the current level, I'm not really buying anything outside of simple dollar cost averaging. But if I was going to predict whether things were going to be better in the future, in the short-term future on stocks compared to the past, man, there's just not a lot of evidence that things are currently overvalued. So just watch very carefully for these earnings reports and make sure that the stocks that you're following are anticipating future growth. All right, I hope everybody's investments are going well. Don't forget to check out that special offer for Seeking Alpha down below in the comments. Hope everyone is having a great day. We'll see you on the next video.